Good morning, everybody. Good morning, all you magnificent melonheads of the world, and happy Friday, everybody. Today is April 4th, 2025, and the mayhem continues in markets this morning. Yesterday's sell-off has been reignited by Chinese retaliation. The Chinese government announced retaliatory tariffs on all imports from the United States, 34% to be exact. And they also announced a slew of other duties starting April 10th, targeting U.S. defense firms, which is kind of interesting because China doesn't buy weapons from the United States. Also, agricultural companies and export controls on rare earth minerals. So they're targeting some strategic supplies that the United States doesn't have there. Now, these retaliatory measures are severe. Let's not downplay 34% tariffs. That's a pretty big number. But let's also keep in mind the United States doesn't actually export all that much to China, or at least not relative to how much we import from China. And of course, the 34% number is well below the 50% and change that we are charging the Chinese. So there's a little bit of, I don't want to say weak sauce here, because again, these are significantly high tariffs, but they're a lot lower than the tariffs we're putting on them. And the tariffs they're putting on us is on a lot less stuff than we are putting on them. So China's kind of leaving a little bit of wiggle room. This is a retaliation, but I wouldn't call it an escalation. So that's an interesting response from the Chinese this morning, but it was enough. Shortly after this was announced, we saw U.S. stocks, especially tech stocks, started to sell off again. The Dow was down over 1,000 points once again. Interestingly, also, we've got the yen in Japan is strengthening once again. Watch that yen carry trade unwinding, guys. That is a risk that's been lingering in the markets. Caused a lot of trouble back in August. It caused a little bit of a market panic. It kind of went away for a while, but this trade war could reignite that. We also got some strange, I don't know about strange, but some unusual reactions around the world to these tariffs. First of all, let's talk about Taiwan. Taiwan this morning is out with a $2.7 billion stimmy package to help their companies offset the tariffs. No retaliation from Taiwan. They're actually just absorbing the blow, printing some money, borrowing some money, and handing it off to their companies. Now, let's also view this in the context of that deal with Intel that was announced yesterday. I don't know if you guys, if you didn't catch my afternoon live stream yesterday, we talked about how Intel just cut a deal yesterday with Taiwan Semiconductor to operate U.S. chip manufacturing plants. If you can't beat them, join them. Taiwan Semi is taking a 20% stake in a joint venture to operate factories building chips here in the United States. So you've got no retaliation from Taiwan and a couple of deals that are actually quite favorable to the United States. As my moderator Mish put it this morning, it looks like Taiwan is writing checks to save their own asses. And you know, you can't help but wonder with everything going on with Taiwan and the escalation in the trade war, are military guarantees being made behind closed door in exchange for these rather soft measures coming out of Taiwan? One wonders. Also, a little closer to home, we got announcements from Stellantis yesterday and this morning, already closing factories in Canada and Mexico, announcing immediately following these tariffs. We've got 4,500 temporary layoffs at a factory in Canada. In Mexico, I guess the union down there got a better contract because the workers are being paid to sit there and do nothing as the plant is idled. I guess they're forced to pay these guys no matter what. Now, a little bit of shooting oneself in the foot. You've actually had 900 temporary layoffs here in the United States, because as those factories in Canada and Mexico have been shut down, the parts that they send to the United States for assembly are no longer coming. And so you actually have U.S. workers getting temporarily laid off, not as many as in Canada and not as many as are being paid to do nothing in Mexico. But still, that's a few hundred Americans who won't be getting paychecks. Also, they're claiming it's not related to tariffs, but I'm having a hard time believing that. There's a plant in Warren, Michigan that is temporarily closing. They're saying it's due to a shortage of engines and not because of tariffs. But funny thing about those engines, they're made in Mexico. One wonders, is that a tariff story or not a tariff story? Engine shortage. They claim the shortage was happening before the tariffs went into effect, so maybe that's true. Also, big news this morning, the jobs report came out, and it was a good one. Was it good enough to save this stock market? Probably not. But the headline number, the U.S. added 228,000 jobs in the month of March, way more than the 135,000 that was expected. But there's a but. There's always a but. 48,000 in downward revisions combined between January and February to the prior numbers. So it looks like the Trump administration is continuing the great trend of overinflating the jobs numbers only to downwardly revise them a month later or 2 months later. When you subtract those 48,000 jobs added from the 228,000, you get about 188,000 or 180,000 jobs added, which is only a slight beat from the 135 expected. I don't expect this jobs report to be enough to change people's minds. I mean, the fear, I'll show you the fear greed index in a second here. People are freaking terrified. They're terrified, if you will, of what's going on in this market. Now, some of the sectors that added jobs, the two biggest gainers were healthcare and social assistance. Look, healthcare is a function of the aging demographics in this country. Social assistance, those are jobs of despair. The reason you have a bigger demand for social assistance employment is because there's so many people that are living in poverty around the country. So I don't think jobs added in healthcare and social assistance is necessarily indicative of prosperity in the job market. We did have some jobs added in transportation and warehousing as well. That's some legit economic activity. Also, it's important to note all of these federal layoffs that might happen, may not happen, depending on what the courts decide, not yet showing in these jobs reports. There was a little bit of a decline in government workers, mainly state and local. But it's important to note all these DOGE announcements, these hundreds of thousands of layoffs and buyouts from federal employees, not yet showing up in the jobs numbers. Guys, we got a lot to talk about. Once again, it is a busy day, a lot of things moving in the market. Let's shrink my big melon of a head and see what's happening in the market. And if you please take a moment to hit that beautiful like button. And if you're new here, hit that subscribe button and come on back tomorrow because we do this every day, whether the market is throwing a fit or not. And today, it's throwing a fit. Check this out. I've never seen this before. Now, granted, I haven't been watching this like a hawk my whole life, but single digits on the CNN Fear Greed Index. Guys, this market is freaking out. Absolutely freaking out. Almost every category or every single category is in extreme fear here. Typically, when the market gets this fearful, you end up with a bounce. Now, I'm not saying the bottom is in, but when you're dropping 1,000 points plus days in a row, you never know when you might get one of those 1,000 point upside swings. Be very careful, guys. If you're tempted to pile in and try to lever up and short this market, there are entire trading floors that are right now coming up with ways to engineer a short-term buying spree on the way down just to trigger a margin call and a stop loss on your trades, collect your money, and then let the market keep falling. So just be careful when things get this volatile. As always, don't go too far out on that leverage. The S&P 500 down another 128 points, 2.4% lower this morning. We caught a little bit of a bounce at 7:30 a.m. Eastern time this morning. I'm not sure what that was. There wasn't really any big news around there. And then the jobs report came out at 8:30. You can see right here, really no reaction in the market to that jobs report. It didn't sway people one way or another. Looking over at the Dow, it's down another 1,000 points this morning, 2.5% lower. Off its lows, at one point we were down, about 1,500 points. So, hey, I guess it could be worse, right? We're down 1,000 points, but look at the bright side. It ain't 1,500. This is Jack pretending to be an optimist. How am I doing? Yeah, not that good. Not going to make it there. Looking over at the NASDAQ, down another 480 points, 2.5% lower, about 2.6% lower. I'm not sure of the exact numbers here, guys, but as of yesterday, the NASDAQ was within 2 to 3% of bear market territory, 20% down from its all-time highs. We're right there. I don't know if we've crossed that threshold yet. We'll see where we open up. But big tech could be headed for a bear market here. All three indexes are in correction territory. Looking over at the U.S. dollar, modestly higher this morning, about 25 basis points, back above 102 at 102.19. A slightly stronger dollar here coming as a little bit of a relief after yesterday. The dollar weakened substantially. Looking over at the bond market here, we have got Treasury yields are lower almost across the board and in a big way. And this is on top of a big move lower in yields yesterday. So once again, the flight to safety is continuing. People are running to the long end of the yield curve for the perceived safety of U.S. government debt. They're parking all that money from the stocks they sold over there, and that's making the government's borrowing costs a little bit cheaper. The 30-year Treasury is at 4.370, down 11 basis points. The 10-year is at 3.933. That's 12 points and change lower. The 2-year, 3.59, 13 and a half points lower. And the 1 month is at 4.314, up by a fraction of a point on the 1 month. Pretty much noise on the chart. Of note here, guys, the 10-year Treasury below 4%. Big move in these last couple of days here. Keep an eye on that flight to safety. Now, I did mention a flight to safety, which typically involves selling stocks, check, buying bonds, check, and precious metals rallying, no check. Once again, gold and silver sharply lower this morning. We got spot gold, $3,083, off by $30 and change here, about 1% lower. Spot silver is at $30.72, off by another $1.13, 3.5% lower. Both precious metals have been selling off significantly ever since the announcement of the tariffs and the failure to include bullion in the tariffs. That big draining of metal from London to New York that's been happening since President Trump's election, it just abruptly stopped yesterday. And I think you had a lot of people were making levered long bets that gold was going to continue ripping higher. And when those tariffs didn't include gold and silver, those levered long bets started to get the margin calls. By the way, a lot of people are going to be getting margin calls soon here, guys. There's a lot of people who are trying to, turn the ringers off on their phones, hiding from the margin man here. Keep an eye on those last few hours of trading today. Also moving this morning, we've got copper. Look at that, 6.3% lower for copper futures here. Guys, Dr. Copper is saying this economy is sick, all right? Copper is a purely industrial metal. It's down big. It is forecasting a major global economic slowdown stemming from this trade war. You've got platinum is down 2.6%, 1.5% lower for palladium as well. And oil also flashing buku recession signals, 7.4% lower for West Texas Intermediate crude oil, down by another $5 this morning, $61.96. This was over 72 days ago, 3 days ago maybe. It wasn't that long ago. Oil is plummeting big time here, guys, after that announcement yesterday between the tariffs and the worries of global economic slowdowns. On top of that, the Saudis tripling the expected increase in production for the month of April. Oil's fallen sharply here. Now, it's also worth pointing out, if this trade war spreads to the oil patch, which it very well could do, if the Saudis and OPEC start flooding the market with oil to try to put U.S. producers out of business. Keep in mind, U.S. shale oil producers are much more efficient than they were in 2015, the last time this happened. They actually got better at it. So the break-even price for American oil producers is a lot lower than it was the last time there was a price war in the oil patch, which means we could get a lot cheaper oil here. Now, hey, I've caught a lot of heat for saying this over the last couple of months. The whole tariffs are inflationary thing. And I stand by that. I do think consumer prices are going higher, even if the money supply isn't expanding. But check out what's happening to asset prices. Look at stocks, prices going down. Look at commodities getting a lot cheaper. There's a little bit of deflation going on in markets at the moment stemming from these tariff announcements. I'm just saying. And speaking of deflation, we've got Bitcoin is lower too, even if my chart does not want to cooperate this morning. Here we go. That's a little better. Bitcoin is $82,977 as priced on Coinbase, modestly lower from yesterday. We're off by about another $200 here. I have to say, guys, I mentioned this yesterday. Bitcoin is performing much better than I would expect, considering the bloodbath in tech stocks and the correlation we've seen between Bitcoin and tech stocks over the last year or so. Bitcoin's holding up pretty good here. That's not to say Bitcoin is doing well. Bitcoin is down several $1,000s, and it's threatening to break below that $80,000 threshold. And if that happens, we're heading sharply lower. But all things considered, it could be a lot worse for the holders this morning. Also, some important trends to keep an eye on. The JPY, the USD JPY chart, the Japanese yen continues to strengthen here. This chart keeps heading lower, meaning fewer yen to make $1, i.e. the yen is strengthening. We're at 145.5 here this morning. Down again, albeit not as sharply as we were yesterday morning. But I just want to point out that level we're at right now is the level we were at in the middle of the day on August 5th when everybody and their brother was freaking out over the yen carry trade, guys. So watch that Japan risk. Watch those U.S. investments getting liquidated, converted back over to yen, and then paying off that yen-denominated debt that they took out to take on that yen carry trade. Keep an eye on this yen, guys. This could reignite the sell-off. There's a couple of thousand points down in the indexes hiding in this chart that we haven't seen yet. I don't know when it gets here, but it will get here at some point. Also, the euro is actually a little bit weaker this morning. That's interesting. The yen continues to strengthen, but the euro is pretty much unchanged from where it was yesterday at 0.905. All right, let's talk about the Chinese retaliation here. China hits back at Trump tariffs with 34% duties on all U.S. goods. All right, so China, shots fired. Or should I say, returning fire. China retaliated against new U.S. tariffs with a slew of measures, including levies on all American imports and export controls on rare earths, escalating the trade fight with President Donald Trump. I wouldn't call this an escalation, all right? I think this retaliation is smaller than it could have been, and there's a case to be made that this is a de-escalation. We knew the Chinese were going to do something. They weren't just going to take this and eat it, right? What they have returned is smaller than what we sent, and in my opinion, that's actually a modest de-escalation, even if the market is throwing a fit. Beijing will impose a 34% tariff on all imports from the U.S. starting on April 10th, matching the level of Trump's so-called reciprocal tariffs on Chinese products. Chinese authorities also announced other measures, including immediately restricting imports on 7 types of rare earths. That's interesting. My moderator, Mish, caught wind of this yesterday. President Trump's administration had announced an investigation into tariffs and restrictions. I forget the exact wording, but it was critical minerals that they were targeting. And then we see export controls from rare earths from China a day later. We're talking about those rare elements that are used in electric vehicles and solar panels, as well as plenty of military and electronics applications. And the United States doesn't make many of these things. This has been a subject of great concern for several years now. There have been a lot of investments made in this space domestically in the U.S. Look for more announcements to that effect in the weeks ahead. Launching anti-dumping probe into medical and CT X-ray tubes from the U.S. and India. That's news to me. They're halting the import of poultry products from 2 American companies. All right, so they're going after agriculture. That is Trump's base, targeting farmers. We've seen this before in retaliation for Trump's tariffs. Adding 11 American defense companies to the unreliable entity list. I find that unusual because China doesn't buy any weapons from the U.S. anyway. They're also importing export controls on 16 U.S. firms, essentially getting blacklisted, and halting imports of sorghum from a U.S. company, once again targeting agriculture and Trump's base there politically. Look for more of that from the Europeans as well. And as usual, the last paragraph of Bloomberg is usually pretty good here. Still, China is leaving some off-ramp. This analyst from the Atlantic Council said China's retaliation seems still proportional and targeted by design, focusing mainly on agricultural goods and defense contractors, both of which are key Trump coalition constituencies. Again, this could have been a lot worse. The market is freaking out over this Chinese retaliation that I think they probably should have expected anyway. And, well, the number's smaller. We import less than they import, so I don't think this is an escalation. There, that's all. Meanwhile, Taiwan offering $2.7 billion to support firms hit by Trump's tariffs. We won't spend too much time on this one, but the interesting take here, guys, is rather than retaliating, Taiwan is going the route of stimmies. In other words, the Taiwanese government is by default eating the cost to try to offset these tariffs that are also going to be eaten by you. I would just point out, remember, tariffs are a tax on the consumer. You're paying for a lot of this, but it looks like the Taiwanese government will not be returning fire at the United States. And between this and that Intel announcement, it really looks like Taiwan is choosing the carrot over the stick to try to navigate the muddy waters of this trade war with President Trump. All right, now let's talk about the auto market because we had some immediate reactions in the auto market yesterday. Stellantis idles plants in Mexico and Canada due to tariffs. So right away, Mexico and Canada are feeling the heat from these tariffs on autos. Stellantis is pausing production at 2 assembly plants in Canada and Mexico as the company attempts to navigate President Trump's new round of 25% automotive tariffs. The company confirmed on Thursday. The actions are the swiftest and most drastic by an automaker regarding the new tariffs, which took effect Thursday and are imposed on all vehicles imported to the U.S., including from Canada and Mexico. Stellantis' downtime starts Monday and is set for 2 weeks at the automaker's Windsor assembly plant in Ontario, Canada, and the entire month of April at its Toluca assembly plant in Mexico. As a result of the pause in production, about 900 workers in the U.S. at supporting plants will be temporarily laid off, in addition to about 4,500 hourly workers at the Canadian plant, according to the company's spokesperson. Workers at the plant in Mexico will still report to the facility, but not produce vehicles due to their contract terms. How do I get a gig like that? We're going to pay you to show up and do nothing. Sign me up. Look, guys, a little bit of self-inflicted wounds here. I couldn't help but notice those 900 American jobs that are getting temporarily laid off as a direct result, or as we'll say, not a direct, an indirect, a second-order result of these job losses in Canada and Mexico. That kind of harkens back to what I was talking about in my afternoon stream yesterday. The economy around the world is now so globalized and so interconnected that there's really no way to tell what the knock-on effects from this tariff war are really going to be. In this case, there's no way to predict 900 American workers losing their jobs because the plants that supply their parts are shutting down in Canada and Mexico. How much more of that kind of stuff is going to happen all over the world? Again, a lot of people talking about Smoot-Hawley yesterday and the tariffs of the 1930s. This world looks nothing like the world of the 1930s. Nobody really knows how much of that is going to happen here. Also, we've got more news here. They're saying this isn't a tariff story. I'm a little skeptical of that. But we got the Warren truck SUV production will pause for weeks due to an engine shortage, Stellantis says. Stellantis will pause vehicle production for several weeks at its Warren truck assembly plant in a move the automaker said is not tied to other tariff-related factory cuts it announced on Thursday. Due to an internal shortage of engines, Stellantis is allocating all available volume to support the Ram 1500 at the Sterling Heights assembly plant. Stellantis said in a statement from spokesperson Jody Tinson, as a result, the Warren truck assembly plant will be down beginning April 14th. The plant is expected to resume normal operation production in early May. So about a 1-month furlough for those workers. The engines are made at a plant in Saltillo, Mexico, but Graham noted that the shortage problem began before President Trump's tariffs began taking effect. The automaker said the Warren truck shutdown isn't related to other moves it announced Thursday to idle plants in Mexico and Canada and to lay off about 900 workers. So they're denying the tariff-related thing. More U.S. shutdowns here. Now, guys, I would just point out a lot of people were very critical. It was about 2 weeks ago, or maybe late last week. I had my buddy Tommy on the channel from Car Concierge Plus, and we were talking about how car prices look like they're headed higher and that it was a good time to buy a car. Tariffs certainly wasn't gonna help car prices. That was going to send them higher. And we also talked about how a lot of these factory shutdowns, a lot of the automakers are reducing production because their profit margins are too thin and they can't just pass these costs on to consumers and they can't just eat these costs of tariffs themselves, which means they're going to produce fewer vehicles because they're not going to lose money. And a lot of people disagreed with the direction of car prices. But look at these last two articles. Car production, which way is it headed? Is it going up or is it going down? It's clearly going down. And when supply heads lower, at the same time tariffs are put on top of prices, what happens to price? It goes higher. It goes sharply higher. Even though people already can't afford cars, it looks like cars are going to get even more expensive, and not a little bit, guys. I'm talking a lot of bit. And at the same time, we've got a shortage of used cars because now in 2021, 22, the chip shortage those cars are all 2 or 3 years old. And those millions of cars that were not made during the chip shortage are not entering the used car market now. So we're going to have a shortage of used cars right as we have prices of new cars going through the roof. Tough. It's going to be tough to buy a car, guys. Let's just put it that way. All right. Meanwhile, let's talk about the jobs report. Another big one today came out. Total non-farm employment in the U.S. rose by 228,000 in March, and the unemployment rate changed a little at 4.2%. Put a pin in that unemployment rate. We'll talk about that in a little bit. Job gains occurred in healthcare and social assistance and in transportation and warehousing. I mentioned earlier, healthcare and social assistance jobs, not really signs of economic prosperity. Those are functions of aging demographics and, in my opinion, with disparity, if you will, despair in the economy. Also, some important things I want to talk about here. Within the government, federal employment declined by 4,000 jobs in March, following a loss of 11,000 in February. Employees on paid leave or receiving ongoing severance pay are counted as employed in the establishment survey. And the important thing to realize there is all of these federal job cuts, the DOGE cuts, not yet showing in the jobs report. That's what that's telling us. And we got Market Watch saying the same thing this morning. Major federal job cuts not visible so far. One thing the March jobs report probably won't show is a big plunge in jobs in the federal government. Scores of fired employees have been temporarily reinstated by court orders amid legal fights over whether the White House actions are legitimate. And federal employees still receiving compensation, even if they signed up for buyouts, are still counted as employees. Government has been one of the biggest sources of hiring in the past few years, though many of those at the state and local level. All right, so the DOGE cuts not yet showing in the jobs numbers. So here's a chart of jobs added, 228,000 added. Also worth noting, guys, again, 48,000 in combined downward revisions to those January and February numbers. So you subtract those 48,000 in downward revisions, you end up with 180,000 added. All right, it's a little bit higher than the 135 the market was expecting, but not really by much. Also important to note, the unemployment rate ticked up to 4.2% from 4.1%. I'm not so worried about that, guys, because this is a rounding error. Last month, the February unemployment rate was 4.14. This month, it's 4.15, triggering the roundup. There was no noticeable substantial change in unemployment for the month of March. Whatever's going on in the job market, it hasn't gotten here yet. That's the important thing. Also, labor force participation rate ticked up a little bit to 62.5% from 62.4%. Although if you look at the long-term trends here, we're still trending down after a little bit of a recovery following the pandemic. You look at a 10-year chart, labor force participation rate remains lower than it was pre-pandemic. Another thing to keep an eye on is average hourly earnings. They rose by 3.8% in March of 2025. Notice that is average hourly earnings. Keep an eye on that hourly figure there. Now, that's a smaller increase than the 4% jump we got in February, but they did rise. So Americans continue to get a raise, at least on an hourly basis, 3.8%. That's right in the ballpark of the inflation rate. So it's not really moving the needle as far as quality of life for the average worker. But one thing to keep an eye on, as we have seen hourly gains in wages, average weekly hours continues to decline. Now, we were 34.2 this month. That's the second consecutive month at 34.2 hours per week worked. But you'll notice the decline in this trend. It goes back a couple of, here, let's set it to 5 years. You can see we have been falling in weekly hours for years now. So even though hourly wages are rising, hours worked is falling, which means your weekly take-home pay is not rising nearly as much as they're trying to tell you. This is one more of those statistics that when you really look at what the numbers are telling you, the economy has never really been as rosy and strong as they've been advertising for the last couple of years. Although now the press is more likely to ask those difficult questions and reflect that reality because something changed between this year and last year. I'll let you guess what that was. All that said, guys, I'd say this jobs report, it was better than expected, but just barely. Nowhere near enough to change this market's mind. Remember, that fear greed index is just ridiculously low right now, For the moment, panic reigns, but we'll probably catch a bounce at some point before resuming lower. And I just want to say thank you very much to the Pasta Man. Thank you so much, Nashville, for supporting the channel. He says, I really hope they don't tariff legal services, accounting, or financial complexities. Then we would be in big trouble. Good morning, Jack and Mish. Good morning to you as well, Pasta Man. Yeah, what does the U.S. really export? Financial shenanigans is arguably our chief export. So if you really want to wage war against the United States, put a tariff on fraud. And they'd be like, whoa, okay, everybody, let's give peace a chance. Tariffs on fraud, all right. How about free trade agreements for everyone? Thanks, Pasta Man. Appreciate the laugh this morning and the support of the channel. You, sir, are a gentleman and a scholar. Gordon Guanu, what's going on? Sir, he says, I'm torn between let it fall down and won't somebody think of the pensions? But it was always going to get worse before it got better. You know, that's a good point here, guys. I do think this correction in markets, this bear market, this price discovery, it needs to happen. It's got to happen. This everything bubble's got to stop. It's obscene. All right. The 10% have gotten incredibly wealthy in this everything bubble. Now, here's the problem. For the last several years, as Wall Street has been playing this game of the floor is price discovery, they've been hiding what this crap is really worth. And they've been hiding it by selling it to our pensions, by selling it to mutual funds, which sit in 401ks and IRAs. In other words, when this price discovery finally does happen, it's going to be the poor and the middle class who take it on the chin the most. Abso-freaking-lutely, Gordon, you're right. And I'll be honest with you, the last time anything like this happened, the GFC, everybody was so upset that they bailed out Wall Street, they bailed out the banks. So they're doing it differently this time. First, they park all the crap in the pension funds, bailing themselves out quietly, and the press goes along for the ride, not calling them out on it. We've tried to call them out for it on this channel. And then when everything collapses, well, it's easy. The government will just bail out the pensions, right? Who could be opposed to bailing out pensions? That's grandma. You can't let grandma go broke. But who are they really bailing out? Since the reason you need to bail out the pensions is because Wall Street looted them. It's the same thing. They're just bailing out Wall Street. It sucks. I've been trying to shine a light on this. I've been trying to stop it from getting worse. Well, met with minimal success. Let's just put it that way. But thank you, Gordon, for pointing that out. It is a shame, sir, but it is the world we live in. Thank you, TK, for supporting the channel. Says, put this towards your neon melon sign. Mission the chat will fill you in. All right. Are we talking about ditching the banana and going with a neon mel? I think I can get down with that. Are we going to start a GoFundMe for the Mel sign? Is that what we're going to do? Don't start a GoFundMe, guys. The banana had a good run, but it's time for an upgrade. All right. Get me to 70,000 and I'll replace the banana. How's that, guys? We need about 9,000 new subscribers. So if you want the banana to go, feel free to tell 9,000 of your closest friends and family all about this channel. And we will replace the melon with the neon mel. That's the deal. How's that sound? I got to read the chat. All right. Uncle Fedster says, happy Friday, Jack. It looks like those who moved manufacturing from China to Vietnam are not going to avoid tariffs. Very astute operation, Very astute observation, Uncle Fedster. You're right. The tariffs on Vietnam, correct me if I'm wrong, but Vietnam was the second highest tariff rate when you account for the extra 20% that they're putting on China. And a lot of production has moved in the last few years from China to Vietnam. They're Chinese firms, but they're doing their manufacturing in Vietnam to try to avoid those tariffs. Well, how's that working out for you today? Not so much. So you're right. The Vietnam and Mish was very quick to point that out on Wednesday night. He said that is a great big FU to China, those Vietnamese tariffs. Good observation, Uncle Fedster. Thank you for supporting the channel. Viv B, thank you so much for gifting 10 Nobody Special Finance memberships. Welcome to the Melon Heads, you 10 Melon Head noobs. If you guys got one of those memberships, be sure and say thank you to Viv B. And Viv, thank you for supporting the channel. Todd H says, hey, Jack, is it time to buy more oil for the Strategic Oil Reserves or the SPR? Well, we do. There's about 180 million barrels of oil needs to be replenished in the Strategic Petroleum Reserve. I'm going to go out on a limb and say not yet. Not yet, Todd. Although it would be a good deal if we were to buy back in the 60s, because a lot of it we sold in the 80s, in the 90s, even some of it over 100. it'd be a pretty good deal if we bought it back now on that trade of dumping the SPR to support Biden's poll numbers. I mean, to help the economy fight inflation. I think oil's going lower, though. Barring another hot war in the Middle East between the U.S. and Iran, that's a big if, all right? Assuming that doesn't happen, I think oil's heading back to the 40s at least here. Maybe then we refill the SPR. You don't refill the SPR until oil prices have gotten so low that your American producers are at risk. At that point, it's worth money to shore up the U.S. financial footing by increasing the SPR and supporting American jobs at the same time. With oil prices so high into the profit margins for oil companies, at this point, refilling the SPR is just inflating oil company profits at the expense of the taxpayer and higher inflation. I think you let prices come down further before you do that. That's just my hot take on that one. But a good point, Todd H. Thank you, sir, for supporting the channel. Nashville Pasta Man says China will steal 40% more IP starting at 4/1/25. Let's see, what's 40% of everything and anything they've ever wanted to steal? Yeah, intellectual property theft. By the way, that's one of those things, you know, a lot of people gave Trump a lot of heat for the way he calculated tariff rates, right? For the fine print that was like, you know, currency manipulation and trade barriers. And the one guy from the Atlantic actually derived the formula within a couple of minutes and figured out what they did. It was it was a lot of shady, let's be honest with you. But one thing that you can't quantify is intellectual property theft. And that's been going on for decades. The Chinese take whatever the hell they want, and they are ripping off American innovators. Abso-freaking-lutely, right? You see it, all these guys who talk about like people who went on Shark Tank with inventions. When a show of Shark Tank would air and an American invention, which was patented, would be on Shark Tank, within a week, some Chinese knockoff was for sale on freaking Alibaba. All right. And do you think the innovators, the guy who invented that thing was getting compensated for that? Hell no. And how do you quantify that? How do you put a dollar amount on all that crap? You can't. So, you know, look, I'm not trying to like make the case for tariffs here. I do think tariffs are destructive. That being said, the war started and we're in it. You might as well fight it to win it. But that said, what China has done to us goes well beyond trade barriers. It goes well beyond their tariffs. It goes well beyond currency manipulation. IP theft is a huge issue between the U.S. and China. Very good point, Nashville Pasta Man. Thank you, sir, for supporting the channel. 1970s legend. All right, welcome to the Melonheads 1970s legend. Thank you, sir, for supporting the channel. I appreciate that very much. Will I be seeing you at 2 p.m. Eastern time on our weekly get-together on Zoom? Hopefully so. Links down below should you feel so inclined. Also, shout out to my magnanimous Melonheads on Patreon. Thank you guys for supporting the channel as well. Charles G says, apparently Ford is offering employee discount on certain vehicles to all buyers, employees or not, around $2,200 from what I hear. Why don't you just lower your prices? Why? All right, $2,200. So is this Ford? Let's game that out. And I believe my buddy Dan mentioned this on our Zoom call last week. Ford offering the employee discount to everybody. That is Ford eating into their profit margins in order to soften the blow from tariffs. All right. Ford can do that. I guess Ford has the margins to do that. Can a Nissan do that? I don't think a Nissan can do that. Can a Stellantis do it? Heck no. Stellantis has a lot of problems. So a little bit of price war going on there with Ford. They're trying not to pass all those costs on. But that being said, a $2,200 employee discount, let's consider an F-150 pickup, which is what, like an $80,000 truck now? With a 24%, 25% tariff on it, that's now a $100,000 pickup. So with your $2,200 discount, you can get it for $97,800. It's still a hell of a lot more expensive than it was before those tariffs. But you can see the automakers getting creative here, trying to soften the blow of the tariffs. Thank you, Charles G., for pointing that out, sir, and for supporting the channel. Todd H. also gifted 10 Nobody Special Finance memberships. Thank you so much, Todd H., for supporting the channel. You are awesome, sir. Guys, say thank you to Todd. That was very nice of him in the chat. PP Poo Poo, how's it going? The 4P. He says, love your unbiased reporting. Mine and my family's future depend on you. No pressure. Well, crap, Poo Poo. God, you're going to make me blush. Look, I'm very biased. I have my biases. You may have noticed I harbor very strong opinions about certain things. AI bubble. That being said, my bias is not drawn along political lines, all right? I was highly critical of President Prune Juice 4 years ago, and I shall be equally critical of Mr. Orange now that he occupies the office, all right? It's, look, I lean right, pretty far right. I wouldn't call myself far right. I think I'm kind of socially moderate. That being said, when I see Republicans doing something wrong, I will call them out on it, all right? Sorry, if that offends you, there's plenty of channels that abide by party lines. I am not a party line tower. That's just not how I roll. So thank you, Poo Poo, for the kind words. No pressure. Mine and my family's future depends on you. Yikes. Okay, I'll try really hard, Poo Poo, for you. Thank you for supporting the channel and for the good vibes, sir. And best of luck to you and your family. M&J, thank you so much for everything you do for M&J. Notice the blue wrench next to the name. Thank you so much for helping out the channel. And she says, neon melon and more tinfoil hats, please. All right. You know, the tinfoil hats, I miss the merch store, guys. I may end up doing a video about this issue. I am so put off by what Spring did with their merch store. It just drives me nuts. And the way I found it, thanks to M&J, really just that, the irony it's just mind-blowing what happened with the merch store. But yeah, we need the dirtbaggery shirts, M&J, and we need more tinfoil hats, I believe. And guys, I got to warn you, if you do end up wearing one of these, I mean, you're going to be fighting the chicks off with a stick if you put this thing on. I mean, it is a magnet, right? Maybe that's what my mom says anyway. I don't know. Mom says it's nice. Anyways, thanks, M&J. Appreciate everything you do for the channel. And sorry about that dirtbaggery t-shirt once again. Zeeble Fritz has been a melonhead for 10 months, and he says, nobody special finance and LC sign collab. What does the LC sign collab mean? I'm not sure. What is LC? Am I missing something there? I'm not sure what LC stands for. Somebody's going to let me know in the chat just as soon as it updates here. Okay, so we need a neon green Mel sign. I don't even know what one of those runs, but I kind of like where you guys are going with this. Love LC. What does LC stand for? LC is Tony from China. Limited charge. Tinfoil hats. I don't know. LC sign is a comic Instagram. Okay, it's a sign maker. Thank you guys for updating that in the chats. I've never heard of that one before. Thanks again, Z, for supporting the channel. Lisa B says, thank you, Jack. Mish, it's M&J, GG, and the wonderful chat Melon Patch for extra info this week. Have a fantastic weekend. You're most welcome, Lisa B. Thank you for all the support of the channel you provide as well. And also, it's a good time to thank your mods. It's M&J, Mish, for everything they do for the channel. Guys, thank you so much for everything you do. As well as Mish, I got to give an extra shout out to Mish. This week, he has been so on point. He saved the show Monday morning when he spotted the change in open interest on gold. I would have done the whole show about something that was wrong if he hadn't spotted that 5 minutes before we went live. It was one hell of an audible, and I was in a panic trying to figure out what I was going to talk about after that. But Mish did a very good job there. He's been all over this tariffs thing. He did the extra show yesterday, so thank you very much, Mish, for everything you do for the channel as well. And Kevin DeBella, thank you, sir. He says, bought 2 tinfoil hats last year. Nan, it's a hit at work. Yeah, I get a kick out of this. Like, the tinfoil hat, the whole point here, you know, besides this kind of joke, this was inspired by my buddy Mike, who, my old college roommate, he's a stand-up comedian on the side. That's his side gig. And his favorite T-shirt is a T-shirt that just says pants on it. That's his. It's one of those jokes that's so stupid, it's funny. And that's kind of what inspired the tinfoil hat. That being said, it's the 2020s. And if you're not a conspiracy theorist by now, you're not paying attention. And that's kind of like the other thing is to normalize the tinfoil hat, because tinfoil hats should be normal now, because governments and the powers that be have gotten so obscenely evil with what they have done in the 2020s that I think they should call out. So they should be called out on it. So this is also a big middle finger to the WEFs and the they with a capital T. That's the point behind the tinfoil hat. Thank you very much, Kevin DeBella, for the good vibes, sir. And thank you, everybody, for having your coffee with the Melonheads this morning. You guys rock. I appreciate everything you guys have done for the channel. We'll look into a neon Melonhead sign. 70,000 subs first. Looking forward to 2 p.m. today, talking with my magnanimous Melonheads on YouTube and Patreon. links down below to that Zoom call. We do it once a week. Don't forget that like button and that subscribe button on the way out. Also, hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.